Hey, good afternoon, everybody. Going to go over our trades for today, Wednesday, October 21st. We had a day where it was sort of like running on a treadmill, just didn't get anywhere. We had 4 trades, pulled out 4.3 pips, so not a big deal at all. That's on a size-adjusted basis. Not a whole lot of economic data. Canada came out with their interest rate decision, which they left rates unchanged. No big surprise there. We do get Bank of England governor making a speech at 1 p.m. Eastern Standard Time this afternoon, although we don't trade afternoons, but we'll still be interested in what he has to say. Some interesting research we came across between last night and this morning by Credit Suisse, and I believe the other one was Deutsche Bank. It says deposits at U.S. banks hit $10.59 trillion, yet loans outstanding as a share of total deposits tumbled to 71% from 92% before the financial crisis. So that's a prime example of why the economy is not moving and why it's not growing here in the States and why it's so sluggish. If the banks don't want to lend it, look, that's where it's going to start, right? There's only so many jobs that are going to get created through private financing or even public financing, through the government, say towns and municipalities, states, and whatever. We also need banks to be lending money. And that is a tremendous drop off. It's 21% drop off from before the financial crisis. So why are the banks doing it is then the question. And if you were to read the research, the new rules and regulations from the Dodd-Frank rules and regulations that were created after the financial crisis, they are forcing the banks to keep more and more money in the reserves, and they're forcing the banks to not take what's called, I don't know if it's called hot money or whatever the government feels or calls, they're large deposits by some financial institutions, and they feel that these deposits, if the economy was to get real shaky, they would be pulling the money out of the banks very quickly. That's why they call it hot money, according to the government. And the government has a list of firms that they considered would be making deposits of hot money. So the government then is making the banks charge the companies that are making the deposit. So could you imagine you deposit, you're a big company, and you got a $500 million deposit that you're putting into the bank, or maybe that's generated from the past quarter or something, and you go to Chase Manhattan or JP Morgan, JP Morgan Chase, or you go to Bank of America, whatever, and you're going to deposit this money, and they say, oh, by the way, the new rules and regulations, we are now going to charge you 1% on that $500 million. Well, those companies are not going to deposit the money. So the deposits of 10.59 trillion, even though those are higher now than they were during the financial crisis, they'd be even higher still if the government wasn't forcing the banks to do this. Some of the firms say, well, we got nowhere else to put the money, so they pay the fee, okay? And there are firms that are doing that. But the banks, therefore, since the banks feel, well, these companies, now the government is sort of warning us, because if these banks take this money in, they're charging the fee, okay, of all this extra capital. And if the banks do that and that money is hot money and goes out, then the banks could then be penalized by the government under the new rules and regulations. So it's a perfect example of how too large of a government and too much government oversight can stifle an entire economy, not just stifling an industry. Years ago in the 70s, 60s, 70s, 80s, 90s, whatever, we had these ups and downs of big government, small government, big government, small government. And we've seen when it got to be big government, they would pick and choose certain industries that they would really put their regulations on, and they would stifle those industries. Well, the government has now decided to go one step further. Instead of pick and choose an industry, they're going basically after the whole economy by going after the finance industry, by going after the banks, because maybe that company that's got 500 million that has a hot money deposit has nothing to do with the finance arena. Maybe they build airplane parts, and they got all this capital, but they're very, they don't want to tie up the money too much, and if things go sour, they want to be able to take the money out of the bank and maybe put it to work for themselves or whatever. Well, now the government comes along, says no more of this. We're gonna put rules and regulations on everybody because we know better. Well, guess what? They don't know better. They are absolutely do not know better than the overall people. Okay. Not for that one. The other story we came across, or I should say research we came across, was just talking about global wealth and how the 1% own over 50% of the wealth in the world. They say the average person in the world is worth like $3,600 when you take away all their debts and their assets and whatnot. This is staggering. They said if you have no debt and $10 in your pocket, you have more wealth than 25% of Americans collectively. So you take 25% of Americans. What is there? 300 million people. So you're talking, whatever, do the math real quick, 75, 76, 77 million, whatever the exact number is, 25%, right? And you take all of them and you collectively put all their assets and all their debt in one big lump. If you have $10 in your pocket with no debt, you're worth more than all those 75 million people put together, because 25% of Americans have negative net worth when taking into consideration debt and assets. That is a absolutely staggering statistic. I don't know if it's ever been higher. I didn't read that in the report, but it would be interesting to find out. Okay, let's get to the trades since I took up enough time there, and we're going to go on to our treadmill type of a day. First one we had a full scalp here of pound yen last night. Long 185.243 went in our favor real quickly. It just was, when we were in it, was just stalling out. It was taking, this is a half an hour chart, so you're doing full scalps, you're gonna be on 5-minute chart or whatever, or a 15-minute chart, even a 1-minute chart. It just couldn't get, we just wasn't feeling it to bust through. We ended up selling 185.258. Obviously you can see we were wrong. It ran all the way up to 185.41 or 42. But like I said, it looks easier on this type of chart. When you're using a shorter time frame, it can get a little difficult. New Zealand dollar, Japanese yen was another full scalp. We were long this 80.995. We actually sold at a really good spot. It was having trouble getting through that 81. You could see here we were in it for a little bit. Sold 81.034, picking up 3.9 and on a full scalp. Euro yen, we were long this 136.259. We had our stops in. We had 30%. We had 30% of our normal side. We had our stops in. We had our profit target in. Overnight, it just couldn't do anything. Came in the office this morning, saw that it made 2 attempts to get over 136, call it 37 or so. Came in this morning, was actually floating right around that 136.31 level. We saw that it made those 2 attempts. It made another attempt here, 136.35. So obviously there's a seller there, right? So we took the 4.9 pips off the table, being long from 136.259, sold at 136.308. We had 30% of our normal size, so we picked up 1.5 pips there. And then this was a Canadian dollar Japanese yen scalp that we were in 20% of our normal size for several days. Normally we're only in scalps. Could be anywhere from minutes to a few hours to maybe 10 or 12 hours, usually not even that long. Usually if we get in it and we shutting things down for the evening and we're in it for an hour or so, 2 hours, we're shutting things down for the evening, wake up the next morning, 7-8 hours later, usually are out, or if we're not out, we make a decision, pretty quickly. This, we were in for a few days. It never came close to stopping us out, but then again, never came close to reaching our price target. You can see this similar type action. Stalled out up here, 92. We were long from 92.59, so stalled out 92.67. So we were only up at one point, not a whole bunch there. And that was, then 92.50. You could see it stalled out again. So last night we were watching this action. We decided just to take the loss, 13.1 pips. We had 20% of our normal size, losing 2.6 pips overall. You can see what it's done. It came back down to where we were at one point, the lows. So if you're still in it, you'd still be long because you're not getting stopped out yet. But it was pretty evident when this high here couldn't breach the high that it set over here at 92.67. You know, it should have taken out the half figure, ran up to that 67, maybe consolidate a little bit, and then move higher. And then you would be looking at some strength. But the fact that it stalled here 67, and then when it came back to the half figure of 92.50, it stalled out again for about an hour and a half or so. It was pretty obvious that the thing was going to pull in. So, you know, I'm glad we took the loss. Not that I'm glad we took the loss. I'm glad we took the loss because we only lost 13 compared to where we would be now. But this thing could turn around. You never know. So if you're still long, you know, you got your stop, and you know, stick with your discipline. Don't ever adjust your stop to more. Always know what you're willing to risk before you enter the trade. But I'm just trying to tell you how we were viewing this trade. And like I said, it was pretty obvious here that there was just a seller here at this 92.50 level, and most likely a seller will probably come back 92.67. So if you are going to maintain your long position and it does rally, if it gets back to this 92.50 and can't get through it, that's going to be your sign. If it does and it gets to this 92.67, 68 level, and if it stalls out and can't get through it for an hour or so, you might want to liquidate. Same thing here. But if it could get through it rather quickly, both of these levels, you could be off to the races. Anyway, so that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some action tonight and tomorrow morning. Have a great rest of your day.